Hello and welcome. You're watching ET Now and this is the weekly edition of Your Trade. Thanks so much for logging in. I am Snehisha and with me is my co-anchor Shreyansi Singh. Let's recap what the market has done in the week that went by and well, Nifty closed with an uptick of 1.2% in what was a topsy-turvy trading week for the Nifty and for all the benchmark indices as well. Earlier in the week, we did see some time-bound correction take place, but well, all of that was recovered. What a stellar recovery these benchmark indices have made in the latter half of the week. Nifty mid-cap also closing with an uptick of 0.5%. Nifty small-cap, though the laggard amongst all of the three, closing with a slight downtick of 0.5%, but not too much to worry over there because that stock on one day of the week was down 4%, so that has recovered. And how? And well, let's talk about some sectoral indices on the weekly basis. Auto is the real winner over here, backed largely by that market cap gain that we saw in TVS Motor, as well as the brokerage note on M&M, its tie-up with Volkswagen, and a whole lot of other factors that did very well for M&M as well. So M&M and TVS Motors was the one that led Nifty Auto to a 4.2% uptick on a weekly basis, followed by PSU Banks up 2.7%, Nifty IT up 2.1%, Energy also holding on with sharp gains, 1.7% uptick coming in on Energy for the whole week as well. Nifty Bank also up 1.5%. Pharma also doing pretty well. What's key to note is Monday when we did see that correction coming here, IT and Pharma, those were the only two defensives that were holding on to the green. Everything else was in the red. Strong finishing levels for both of them also at the end of the week. However, Nifty FMCG and Nifty Metal, only those two indices have managed to end the entire week in the red. Nifty FMCG down 0.5%. Nifty Metal though down 1.5%, 1.5% cut coming in over there, pressured by all the earnings that came on the metal counters as well. So, well, Nifty gainers then happen to be Wipro, M&M, UPL, BPCL and Bajaj Auto, all up anywhere between 7 and 11% on a weekly basis. Nifty losers on the other side, we just spoke about metals. So Hindalco, biggest loser, 12.5% cut coming in over there. ITC, HUL, Grasim and Sun Pharma, all of those have made up Nifty's top laggards as well. Overall, this is what Nifty and the other indices have done for a week. Started a week where we managed to recoup all of those losses and it ended to be a good week for us. And we've managed to recover everything. TVS, M&M and Energy in focus. But what were the other important highlights? What were the newsmakers in the week that went by?
Absolutely, and a lot of newsmakers this week for sure. Now when you look at big boy Reliance, that held up quite smartly. That displayed a lot of sheen this week. RIL became the first stock to cross that 20 lakh crore market cap. And that is a theme that we've seen play out this week. Now, when you look at SBI, now SBI also held up quite smartly, especially towards the latter half of the week. But this week has really been a week where we've seen a tale of two banks really play out. So while you have SBI holding up quite smartly, especially towards the latter half of the week, another name that we can't help but mention in this space will be HDFC Bank. Now that's seen quite a roller coaster week. It managed to perk up in the latter part of the week, and that's a theme that we've seen play out. Now we've seen a lot of action in the primary market space as well. So when you look at the listings that you've seen this week, Capital Small Finance Bank, Jana Small Finance Bank, Entero Healthcare, all of them listed at a discount. Only Rashi Peripherals listed at a premium. So that's something that definitely we saw playing out in the market as well. Now, India's headline retail inflation rate decelerated to a 3-month low of 5.10% in January, and that was due to easing food prices. When you look at core inflation as well, we've seen a downtick come in there as well, and core inflation dropped to 3.6%. So that's also something that we were looking at. But which are some of the biggest questions that we'll be keeping in mind when we head into the next week?
Absolutely. So we'll be looking to answer all of these questions when we go ahead, and those will be on the lines of if the Nifty is going to sustain that 22,000 mark going ahead. I mean, all the volatility that we've seen, our broader market is going to continue their outperformance. Our banks getting their mojo back, where we did speak about SBI as well as HDFC Bank. So we'll see if the rally in SBI manages to continue. On the back of that, will the PSUs, the public sector undertakings, not only the banks but other sectors like power, infra, energy, will all of them rally, and will they continue their rally as well? We'll also be looking to answer what's happening with the auto stocks, if they are going to continue staying in top gear, and well, the minutes of the Fed meeting will be released next week as well. So we will see what's on the cards coming in for the US as well as the global economy. And to answer all of these questions, I'm now being joined on the show by two of the expert guests that we have. Rajesh Palviya, Head Technical and Derivative Research at Axis Securities, and Ashi Anand, the CIO IME Strategies at Create Investment Managers. Gentlemen, thanks so much for taking the time out and joining us today. Mr. Palviya, let me come to you with my first question, and that's going to be on the overall move that you are expecting to see in the markets ahead. Nifty, we started on a weak footing when we started the week, managed to recover all of those losses, and we ended the week in the green as well when it comes to Nifty. But what's your outlook on the Nifty? And let me also ask you, what's your outlook on the broader indices? Because in the earlier half of the week, they underperformed the benchmark. Latter half of the week, they've outperformed. So what do you think is the outlook going ahead, and what are you penciling in?
So Nifty comfortably now trading about to 21,850. That was the major supply area. And if you look at the weekly close, this is the highest weekly close which we are registering today on a Nifty, and Nifty comfortably holding about 22,000 level on a weekly closing basis. So this is the highest close on a weekly basis for Nifty. Looking at the overall data setup, there was a short covering in earlier days and then now followed by the long built-up setup in Nifty. That clearly shows yes, this momentum can extend further, as Nifty is now holding above the major put-based concentration of 21,800, 21,900. So if these levels are intact in coming trading session, then possibly we can see a target towards 22,300 in the continuation of this up move for Nifty spot. So overall structure is bullish. Most of the sectors are now contributing to this rally, be it IT, be it metal, be it cement and other sectors. Banking is also started contributing to this upward momentum. So broader market is clearly indicating that this rally can extend in the coming week, and one should remain on the long side of trade with stop loss of 21,800, upside target 22,300. On the Bank Nifty, still if we compare with the Nifty and Bank Nifty, the Bank Nifty is still showing a little underperformance compared to Nifty, but overall for near-term perspective, the trend is likely to be on the bullish side, as in today's data, Bank Nifty has also witnessed a long built-up setup comfortably. Now Bank Nifty manages to give breakout above 46,200. That was the major supply zone, and now if it's hold above 46,200 in the coming week, then possibly this rally can extend toward 46,600 to 46,800. That's the level where we are seeing on the near-term basis, and we believe that PSU Bank can contribute to this rally, and some of the private banks are also started recovering. So we may see banking stocks to also perform in the coming week.
Okay, so that's about banking stocks that you just touched upon. But taking a leaf off of your question, I want to pose a question to Ashi then. Now, we've seen PSUs becoming the classic case study of bull and bear for the street, be it PSUs or PSU banks. And a lot of brokerage notes over the last 1 week have debated on what's working for the space, what's not working for the space. And we've seen a lot of market voices also talking about whether or not there's steam left in this particular rally. So which sector do you think will lead the next leg of rally? Do you see PSUs continuing this particular rally that we've seen recently?
So the way we are going to look at this, I think we have to be a little selective when it comes to PSUs. There are certain segments where there is greater comfort, I think, in the overall story. So if you look at PSU banks, for example, this is part of a much longer term asset quality normalization play that we've actually been seeing at Create, where you've seen very large corporate NPAs that they recognized over the last 4-5 years. That entire pain has now gone away, and you're actually going through a period of RBI normalization. Valuations that had gone down to fiscal levels have recovered, but potentially there could still be some move there. We are a little more comfortable with the higher quality PSUs, and I think SBA really stands out there. In terms of other PSUs, I think we are a little more comfortable in areas where there is clearly traction. So certain defense names we are comfortable with, but I think when you're looking at defense PSUs, you have to be very careful about some of these defense PSUs have extremely lumpy order books, so we try to stay away from those. There are also other kind of segments within capital goods, etc., where there is a certain amount of traction. Railways is also there, but one key element is the number of the stocks have actually moved up quite considerably. You need to stay away from anything where there is potential regulatory risk. So I think PSU is a space where that while we are participating, we're doing so very selectively and very carefully in terms of the names and the sectors that we do.
All right, Mr. Anand, thanks for your view on that. But gentlemen, stay on with us because we are slipping into a very short break. We'll be right back with more questions for you on the other side and more for our viewers as well. So stay tuned. Hi there, welcome back. You're still watching Your Trades with me on ET Now. Well, let's get back our panel of guests, and Mr. Palviya, pardon me, I'm going to come to you with my question. And my question is on the auto segment, right? Because this week we've seen quite the run-up coming in auto. That segment ended the week as the top sectoral gainer on the Nifty as well. And you had names like TVS Motor that crossed 1 trillion rupees market cap. M&M has done pretty well, up 7.5% for the week as well. So do you think this was only based on the brokerage notes that we saw for M&M and the numbers, and the rally only lasted for so long till all the jitters about and the excitement about this wears off, or do you still see some more legs to this rally that we're seeing in the auto space?
So most of the auto stocks are doing good, and looking at the overall structure for most of the stocks are enjoying almost near to their all-time high trajectory, be it Maruti, be it Mahindra and Mahindra, Bajaj Auto. All these stocks are doing good, and the kind of buying interest which we are seeing in this volatile market also, that clearly shows that we can see further more traction in these stocks. So our preferred choice from this pack is Mahindra and Mahindra. That recent breakout is clearly showing that we can see further more traction in M&M, and possibly we can see target towards 2000 on a positional basis for M&M. So one can adopt a buy and accumulate strategy for M&M, and possible we can see in the coming weeks we can see this rally can extend further higher. Even Maruti is also enjoying all-time high trajectory, and the kind of buying interest now we are seeing, the renewed buying interest which we are seeing above 11,000 mark, that clearly shows that now this momentum can exceed further, and possible target on the higher side we can see towards 11,800 to 12,000 in the continuation of this up move. So that stock is also looking promising. And Tata Motor, that stock is clear outperforming stocks. So I think that these three stocks one can look to buy at the current juncture, and possibly we can see a further more rally to continue. Bajaj Auto from two-wheeler space is also looking bullish. So I think these four stocks one can look to buy from the automobile space at this moment.
Right, well, absolutely. So that's been the move when it comes to auto, but we've seen some strength emerging in some of the pharma names as well. So Ashi, I'll come to you. The likes of Matco Pharma, Aurobindo Pharma have seen good moves this week. Even Glenmark Pharma was a buzz today, even though it's a subdued move coming in on a weekly basis. So what are you penciling in for these names and for the sector as a whole? In fact, what are the key growth triggers that you see for the pharma space?
We've seen in pharma, and it's actually come off a period of relative underperformance over the last couple of years. There was significant pricing pressure in the US if you go back over 9 to 12 months back. That has very clearly kind of receded. So the pricing pressure the sector was facing has basically come off. There are a few large drug opportunities that is actually benefiting the sector. Revlimid is clearly one of them, and there are a number of companies which are all actually benefiting from relatively large revenues and volumes at very high margins that are coming in. I think in the case of Aurobindo, also they recently cleared an FDA inspection without any observations. So what you're basically seeing in terms of drivers is, by and large, when it comes to pharma, the US still is an extremely important market. And the combination of reduced pricing pressure, certain interesting drug opportunities, is helping drive that. EM in India growth kind of continues to be relatively kind of a steady state. So it's really that, I think, a combination of pricing pressures recede and very interesting relative valuations that they started off is what's kind of leading this overall optimism that you're currently seeing in pharmaceuticals. As long as this trend remains, the rally could potentially continue.
All right, Rashi, thanks for your view on that. Mr. Palviya, let me come back to you and share with us what's your stock-specific strategy going ahead into the next week. What stocks are you picking for our viewers?
Stock is from the pharma itself, and Ipca Lab is looking very promising, very strong buying action in today's session. Short covering was clearly there. Stock is now penetrating to its previous swing high. Looking at the volume action, looking at the weekly on a weekly basis close, that clearly shows that Ipca Lab can continue furthermore upside. 1290 is the next target where we are expecting for the stock to deliver in short term. So one can buy with stop loss of 12.15. The second stock is from IT Pack. that is Wipro. Very strong buying action on a daily, weekly, monthly time frame. Stock is outperforming. After a long consolidation on a monthly as well as on the yearly chart, now stock is breaking out, and the kind of breakout which we are seeing and the series of higher top, higher bottom formation on daily chart, that clearly shows that Wipro can continue outperformance. 570 we can see on the higher side in the short term, so one can buy Wipro with stop loss of 525. And the third stock is from mid cap space, that is Gujarat Pipavav Port Limited. If we analyze the overall structure, stock is in uptrend. Series of higher top, higher bottom formation is taking place. Stock managed to give breakout on a daily, weekly time frame of its falling trend line. Very strong buying action in last couple of trading sessions. We believe that GPPL can continue furthermore upside, and possible target for Gujarat Pipavav we can see towards 230. So one can buy this stock with stop loss of 190.
All right. Thank you so much for that roundup coming in on that particular sector. But with this, we're out of time on this edition of Your Trades on ET Now. From me, Shreyanti Singh, my co-anchor Nisha, as well as the entire team that put this show together. Thank you so much for watching.